Welcome to today's morning report on Monday the 24th of April with me, Richard Perlock at Anistat Handset Markets. And what a early morning trading session we have had. Strong gains across equity markets, huge runs higher in the CAC in the wake of this French presidential election where Emmanuel Macron has come out as the clear front runner. I say clear, I mean it was sort of around about where the polls was suggesting Macron would be around 24%, but Le Pen was lower than that, and around about 21.5%. And it seems as though that Macron is fairly well set moving into the second round runoff now against Le Pen. And the markets have taken that as a risk positive move. It sort of removes a lot of the uncertainty over France's position in the Eurozone, and it certainly looks as though the markets have taken that as a positive factor there. You've seen the euro strongly higher. Interesting that we've seen the VIX volatility sharply lower. Look at that move on the VIX to the downside, but the big moves come in the French yield spreads over German bunds. They have contracted quite significantly from around about sort of 55-60 basis points down to sort of 40, 42, 43 where we are now. So a really strong move there on the French OATs has driven that spread, and also the risk appetite improvement has sort of driven traders out of bunds as well. So double whammy there for the market. What we've also seen is just generally across the board risk appetite improving. That's sort of driven markets away from safe havens. You've seen the yen under pressure, you've seen gold under pressure, you've seen US Treasuries rising higher. Strong move higher on the 10-year and the 2-year Treasuries in the States, and that sort of move out of safe havens is also impacted on the dollar as well, where the euro gains have been seen, but also we've seen commodity currencies also gaining against the dollar. So strong moves that we're seeing across the board on these markets today in the wake of this French presidential election. It'll be interesting to see whether these markets retrace. You've seen the DAX, which is now running into all-time high ground, and the CAC, which is multi-year highs. Will those markets retrace? Well, it'll be interesting to see if they can hold on to those gains. But certainly at the moment we've seen a strong reaction across markets. Now, in terms of my, let's get that back quickly. In terms of my chart of the day, just very quickly, there's no major economic announcements today. The German IFO came in slightly better than expected, and that's obviously helped to support the euro. But other than that, there is pretty much nothing to speak of. Although the Dallas Fed manufacturing 16.9 is something to perhaps keep an eye on at 3:30. Now, my chart today is the silver chart. Now, we have seen gold around about 1% lower today. Now, silver is during the risk-off moves, during the risk-on moves, gold tends to underperform silver because of silver's manufacturing component, I suppose you would argue, as an industrial metal as well as a precious metal. But silver has also corrected in the last few days. Now look at this run lower highs, lower lows across the last week. Now it seems as though it's close to forming a top pattern. Now that's 38.2% fib level, and to be honest, the fib levels in general of this big market correction that we saw from 2110 down to 1560, those fib levels have played out a consistent role in major turning points. Traded around the highs of both February, March, and April. We saw a move to the upside, but the lows of March, it picked that low back in mid-April of the 38.2% fib level, and that is now coming under pressure again. So a completion of a move below 1770 now would complete this little top pattern. I suppose, therefore, that for the market to sort of probably come back towards 23.6% fib level then. But what we have seen is a difference in the momentum indicators this time around. Look at the momentum indicators last time the market hit the fib level and bounced. The MACD lines hadn't crossed over, the stochastics hadn't crossed over and falling negatively. The RSI was above 50. These are factors that are all not now the case. And there's a much more of a deterioration in silver. So I think rallies are being seen on an intraday basis, a chance to sell increasingly, and you can see that through this hourly chart. in the last week or so, where you've got this run of lower highs. You've got momentum indicators bearishly configured on the hourly. It looks like that 1770 level is under pressure already. We've seen today 1765 as an intraday low. We haven't seen that on a closing basis, and that was also very early this morning. So we'd look for the move below 1770 to be seen, I think, on a closing basis before you get too excited about the correction. But certainly I think a correction is ongoing. You've got this blue line here, which is an old pivot. Still is a factor, I think, potentially 1724, 1725 area, and I think the market could well be sort of retreating back towards that. Certainly, if gold continues to retreat, I think silver would come under the same bracket, or come inside the same bracket as well as a gold correction. You'd probably see silver correcting as well. So with that in mind, I wish you good luck in your trading today. You've got the silver reaction high today. 1792, 1793, 1804 from Friday. These are a couple of day highs, and certainly there is an argument for selling into strength now. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.